The tokenomics of Shiba Inu have just delivered a shockwave that is impossible to ignore. Analysts are dropping their alerts. After days of collapse and fear, the burn rate has reversed with a staggering 1,567% surge. But what am I even talking about? Well, let me explain. This massive reversal signals a new era for Shiba Inu's tokenomics, proving that the community's deflationary efforts are far from over. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The burn rate is a critical metric for Shiba Inu, representing the percentage change in the number of tokens permanently removed from the circulating supply. This mechanism is central to the project's long-term deflationary goal, aiming to reduce the massive supply and, theoretically, increase the value of the remaining tokens. For days leading up to this event, the burn rate had been in a state of collapse, with community trackers showing a 62% crash to new lows on December 13, 2025. This created significant FUD, fear, uncertainty, and doubt within the community. The current market environment sees Shiba Inu trading at approximately 809 units, with a 24-hour trading volume of $85 million. The market capitalization remains around $4.7 billion. The sudden dramatic reversal, a 1,567% surge, is a powerful counter-narrative to the recent bearish sentiment, forcing a re-evaluation of the project's tokenomics and the community's commitment to deflation. The core event is the monumental 1,567% surge in the Shiba Inu burn rate recorded on December 14, 2025. A total of 1,157,800 Shiba Inu tokens were permanently removed from the circulating supply in a single 24-hour period. This marks a dramatic reversal from the previous day's figures, which saw the burn rate plummet to near zero levels. The surge is attributed to a single, large transaction from an unknown wallet, suggesting a coordinated effort by a major holder or a new, significant utility integration. Analysts note that, while the total number of tokens burned, just over 1.1 million, is a small fraction of the total supply of over 589 trillion tokens, the percentage increase is what matters most. It demonstrates that the infrastructure for large-scale burns is active, and that major players are willing to utilize it, signaling a renewed confidence in the deflationary model. Despite the profoundly bullish tokenomic news, the immediate market reaction was mixed. Shiba Inu's price is currently trading at 809 units, showing a slight decline of 3.21% over the last 24 hours. This counterintuitive response highlights the ongoing battle between fundamental tokenomics and broader market sentiment. The 24-hour trading volume stands at $85 million, which is relatively low, indicating that the news has not yet triggered a massive wave of speculative buying. Analysts note that the market's hesitation is likely due to the recent price volatility and the fact that the burn, while a massive percentage increase, still represents a small absolute number of tokens. However, the surge has provided a crucial psychological boost, helping the price hold firm above the critical support level of 760 units. The market is waiting for a sustained trend of high burn rates before fully pricing in the deflationary impact, but the event has successfully halted the downward momentum that was building from the previous day's burn collapse. The on-chain evidence is centered on the burn transaction itself. Community trackers show the transaction details, confirming the permanent removal of over 1.1 million tokens to a dead wallet. This action directly impacts the circulating supply, which is the core of Shiba Inu's tokenomics. From a technical perspective, the burn rate shock coincides with a period of price consolidation. The relative strength index is sitting at a neutral 43, suggesting neither overbought nor oversold conditions. The massive burn event, while not an immediate price driver, is a fundamental shift that supports the long-term technical outlook. Analysts note that sustained high-volume burns are the necessary fuel for the bullish technical patterns to break out successfully. The burn event acts as a fundamental catalyst, reducing the available supply and increasing the probability of a supply shock when demand eventually returns. The 1,567% burn rate shock has significant implications for Shiba Inu's future. Analysts' opinions are shifting from skepticism to renewed optimism regarding the project's deflationary mechanisms. Expert commentary suggests that this single event proves the burn mechanism is not reliant solely on small, retail-driven transactions, but can be utilized by major holders or integrated into large-scale applications. The implication is that a new era of tokenomics may be beginning, where the burn rate becomes a more volatile, but ultimately more impactful, metric. Potential outcomes include a rapid price appreciation if the market begins to factor in the long-term supply reduction, or a continued sideways movement if the burn rate returns to previous low levels. The key is the source of the burn. If it is a new utility integration, it signals a sustainable, automated, deflationary future. If it is a one-off event, the impact will be purely psychological. The market is now keenly watching for follow-up burns to confirm the start of this new era. The Shiba Inu community, the Shib army, has reacted with overwhelming enthusiasm to the burn rate shock. Social media platforms are celebrating the event, with the topic trending globally. Community trackers show a massive spike in positive sentiment, with many users interpreting the surge as a direct response to the recent price consolidation and a sign that the developers and major holders are actively working to support the token. Developer hints from Kusama have been cryptic but supportive, focusing on the power of the collective and the inevitable reduction of the supply. The community's collective energy is a crucial factor, as the burn rate is heavily influenced by community-driven initiatives and the use of burn-enabled applications. The sentiment is that the tokenomics are finally beginning to work as intended, providing a strong fundamental reason to hold and accumulate. The short-term forecast, 1 week, 1 month, is for Shiba Inu to maintain its current consolidation phase, with the burn rate shock providing a strong floor of support at 760 units. The immediate watch point is the sustainability of the burn rate. Analysts note that a sustained daily burn of over 1 million tokens would be a significant psychological and fundamental driver. The long-term forecast, 3 months, 3 years, is for a substantial price discovery phase, provided the burn rate continues to trend upwards. If the burn mechanism becomes automated and integrated into a high-volume application, the deflationary pressure could become a major factor in price appreciation. Key metrics to watch include the daily burn rate, the total number of tokens burned, and any official announcements regarding the source of the 1.1 million token burn. The tokenomics are now the central narrative. While the 1,567% burn rate shock is a powerful fundamental indicator, a balanced opinion requires acknowledging the risks. The primary cautionary point is the low absolute number of tokens burned, 1.1 million, compared to the total supply, 589 trillion. Analysts note that the burn rate would need to be sustained at this level for years to have a truly significant impact on the supply. Furthermore, the source of the burn is currently unknown. If it is a one-off manual transaction, the effect will be temporary. Neutral insights suggest that the event is a massive psychological victory, proving the mechanism works, but it is not yet a fundamental game changer. The risk is that the community's excitement will fade if the burn rate returns to previous low levels. Investors should monitor the burn rate trend closely, as a sustained high rate is the only factor that will fundamentally change the token's long-term outlook. So, what does this all mean for the Shiba Inu army? The tokenomics are whispering a new trend, and the burn rate is screaming a secret bull signal. A massive 1,567% surge is a clear sign that the deflationary mechanism is alive and well, proving the community's commitment. The supply is tightening, the shockwave has hit, and the stage is set. Now, the only question is, will this massive reversal be the start of a new era for Shiba Inu's tokenomics? Keep your eyes on the data and never stop watching the burns. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.